What's up, guys? Madaz finally back. It's been a long time. You guys have no idea how I miss trading, how I miss making YouTube videos for you guys. It's been a long time for sure. A couple months. Got stuck in a halt, and this is exactly what this video is about. I'm sure you guys have been wondering what the hell's been going on. You know, lots of interesting things got thrown around. While I was gone, people were saying, oh, you know, this guy bleeding out due to fees, short interest up the ass. You know, is he all in with margin and all this nonsense? And really want to clarify that. But more importantly, I want to clarify, you know, what exactly happened and how you can manage the situation and how you can hopefully avoid the situation, because this is obviously probably one of the worst, if not the worst, experiences I've ever had trading in my 6 years plus of trading. This is a nightmare from start to finish, even on the day where it finally resumed 7 weeks after the fact. It resumed on the gray market, and the fills are next to impossible, as you'll see in the video that I will show you guys. You'll see me try. It was an absolute circus trying to get executed, trying to figure out the right combination of routes and, you know, limit order pricing and all that. It was just a circus to watch, and I watched the footage back for the first time since the day I recorded it, and it was just insane. I was frantically trying to figure it out, calling a broker and asking them, hey, what I do is this. Yeah, it was absolutely just crazy. So before we go ahead and jump into that, I want to talk about today's action. Really awesome stuff. Only my second day back. You know, made $1,200 yesterday. Doing small size today, $3,700. So just some change below $5,000 in just 2 days. That is pretty awesome given the sizing that I used. Average size today, 1,000 shares, about the same yesterday as well. Today the biggest size I probably used was, you know, 2,000 shares or something like that. And then beyond that, it was just, you know, 1,000 shares, more, give or take 500 shares. Just kept downsizing as the time went on, proportional to the volume. And you know, if you guys followed my tweets, I tried my best to tweet as fast as I can, give you guys some insider information, pretty much on what I'm thinking. And I did tweet exactly when the volume started dying out around 11 o'clock right here. I kind of knew that as HMOI was going to go sideways, and that's when I decided to walk away from my computer and retire for at least the morning. Unfortunately, that caused me to miss this dump, but you know, I wasn't going to sit through, you know, that 11 o'clock lull hour watching this, you know, chop fest right here, where the stock was trading in like a you know, $1 range for almost an hour. So that was good timing, I guess, if you look at it that way. But overall, great opportunities. If you look at these huge red candles, look at this dump right here, Citron Bash, some great bounce opportunities. This thing was very strong. HMY, obviously a stock that's been in play now for, let's see how long it's been, pretty much since about a month ago. So very, very, very strong stock. Dip still getting bought despite the bash. This thing still came back multiple times today. Great stock to trade. Got this nice little wash right here at the open. If you kind of see, it did dip very nicely to the pre-market high level right here around 34.1. Bounced right back up 37. Got that for a nice quick $2,200 on my first trade. Did get caught in the dump, the Citron Bash there. I thought this was a regular dump, regular washout. So this does happen. You got to be prepared for it. But thankfully, I was only in 250 shares. Again, the power of downsizing after your first win to protect your first profits. If I jumped in with 2,000 shares on this one, I would have gotten screwed. Lost all my gains on the day, and things might have spiraled out of control, both in terms of my P&L and possibly even my mindset. So I was in small on this one, thankfully. It didn't look right. It dumped past the low of day at that point. If you exclude the pre-market action, that's not supposed to happen. I did explain this on a previous video about how can you tell when a washout is actually a legitimate organic washout versus a news-driven washout. Check that out. There should be a link in the top right corner of this video. Very important skill to have to be able to recognize that on the tape and the chart. But basically, this thing shouldn't have broken the low of day at that point. Too big of a red candle. Once I saw that, I kind of figured, even without knowing that it was a Citron bash, that it was probably some sort of news that came out that kind of hit this thing. So I bailed it out immediately. Took about like a $400 or $500 loss, unfortunately, but could have been worse. I ended up making it back throughout the day with scalps, so I ended up still finishing in the 2200s, which is where I was at before the dump on the Citron bash. So overall, great stock. Cassie, another one, great stock. Ran at the open, kept running, nice on dips. I was explaining on Twitter, I was trying to explain how this thing turned from a long bias to a short bias. You can kind of see that this thing went over VWAP, stayed over VWAP, held VWAP multiple times. And once it finally cracked VWAP and could not regain VWAP, that's when I started to say that this thing turned from pretty much officially turned from a long to a short. It became a long to maybe a neutral trade, maybe a no trade, no long or short bias. Once this first support level was breached around $4.40. Prior resistance acting as support was something that was holding this thing, keeping this thing in an upward momentum trend. Once this red candle hit and it could not regain back, I started to stop going long and just sat on my hands, waited to see if this thing turned into a short on a VWAP crack and a fail. And we got it right here on this candle, and then you see the subsequent candles got nowhere near VWAP. I got started shorting these pops right here. Responsible size, of course. Volume was diminishing, but you can kind of see exactly what happened, how this thing turned from a long to a short, how you know not to get caught shorting the front side and not longing the back side. So came out on top, close to $1,100 both ways on Cassie. Very nice there. Didn't execute any losing trades on it. So got a couple other small plays. But for the most part, those were the big winners for the day, comprising a huge percentage of my wins. So let's go ahead and talk about what we came here to talk about, which is DGLT. So DGLT was a stock that ran huge. It ran up 400%. Let's see if we can find that chart. Maybe I'll just use the on-demand feature. Probably easier to look at it. By the way, guys, if you have Thinkorswim, the on-demand feature is very, very useful. Allows you to turn back time and replay days. So you guys want to take a look at something that you missed. On-demand feature is the way to go. So DGLT, if I recall correctly, this stock had some sort of buyout rumor. It looked like a piece of crap on the chart. As you can see, the stock's been going down the drain relentlessly from 4 down to 17 cents. But the day it ran all the way up to $1, hitting a high of $1.08 on some buyout rumors. And 99% of the time, buyout rumors on these piece of shit penny stocks, they're gonna be just rumors. Exactly that, just rumors, right? So this thing was up huge. We got some resistance right here around 90 cents. That's where I started shorting. You can you'll see on my video that my average was at 88.5 cents, which is close to that 90 average. And once this thing broke over $1, I was actually about to stop out. I was close to stopping out. Had this thing ran for a couple more minutes and held on to that 90 level, I would have stopped out and went long. And that's the scary part, because I was that close to getting stuck long on this stock, and obviously you can kind of see that didn't work out too well if that were the case. But just it goes to show you that you never know what can happen in the market. This is the first time I've seen the stock with high momentum, making new high of day with solid volume, get halted like this. And before that, prior to this, from what I remember, the only time stocks get halted like this on a T12 or a T1. And again, T12 is request for more information, and T1 is news halt. Every time I've seen it, it's usually been on low volume and sideways action. And that led me to falsely conclude now that stocks would only get halted if they were going sideways or they traded no volume. This is the first time that the SEC or NASDAQ or whoever was pulling the trigger on this thing decided to say, you know what, screw you guys. I don't care that this thing is making new high days and that it's the stock, the hot stock, the it stock of the hour. We're going to just close the doors and shut you guys out. And that sucks. And I think that's not fair. But that's just my opinion. I think T12 halts are absolute bullshit. They're not fair in general. But what can you do? They're part of the market, part of the action. That's just the way things work. Just because you want to go outside and enjoy nice weather and you want some nice sun, doesn't mean you'll get it, right? It might just end up being a really, really crappy weather, rain all day or something like that, and you can't do anything about it. You can't control certain things. So this is another one of those unforeseen, unpredictable forces that you can't really control. And as traders, you just got to account for that. You just got to deal with it. And there's lots of people out there that say that they claim to, know exactly which stocks are going to T12 or T1 halt and which stocks aren't. And I hate to say it, but I'm just going to call bullshit on that because there's no way you can predict that. Okay? There's no way you can predict that. Now, there are signs where you can kind of say, okay, the stock's up big on the day. There's a higher percentage that it might get that halt because it might, capture the SEC or NASDAQ's attention. It might bring it to their attention, and they might be like, oh, what's going on here? Let's halt this thing. But as we've seen time and time again, there are stocks that run, 100, 200, 300, 500, 1,000%, and they don't get halted. So that's obviously not it. That's not the reason. There's no, the stock is up big, therefore it will halt. You can say, okay, it's up big, therefore it's more likely to halt, but that's not the definitive reason. So I've seen lots of theories and speculative rationales thrown out there behind these halts, but the fact of the matter is there's no definitive way to predict these halts. Okay, and there's no way that I expected this stock that was making new high of day on high volume to get halted because I've never seen it before. So, never say never in the market. Never say never. You never know. You never know. So just to clarify, there's no way to predict that. And as traders, we can only be prepared for it, do our best, and just, manage the situation accordingly. So that's one thing. So DGLT gets to T12 halt and ends up being shut out for 7 weeks. 7 weeks, I believe. So during that time, lots of things happened. It turns out that the buyout rumors were legit or whatever, and obviously that wasn't too cool. Obviously during that time, I was doing my best to get my mind off of it by doing other things and just not thinking about it. But it was hard because, it turned out that the buyout rumors were real or whatever. And the company that was going to buy DGLT, Urban, FT or whatever they were called, they were a real company that done acquisitions in the past. And obviously that didn't sit too well with me. I was constantly paranoid over the course of those 6-7 weeks that this thing was going to resume and gap up huge. And obviously it didn't help that the market was really hot and things were squeezing all over the place. Low float mania was back. Stocks were running from 1 to 3 to 4 to 5, whatever. And I was in constant fear that when DGLT resumed, that it was going to be one of those stocks. And, I was just really, really frustrated, very just cursing my luck because, as we all know, T12s on penny stocks 99% of the time result in a negative outcome. RTNB got a T1 halt the very next day on DGLT, after DGLT. And that got a T1 halt, and it gapped down, and people that went in with 50,000 shares ended up banking. And I'm thinking to myself, why did I get stuck in that? Why did I get in the one that turned out to be the one black swan one that ended up being the possible squeezer, right? Out of all of the T12s that ended up fading away and just, forgotten in time and memory, and no, just back down to where it came from. And I get stuck in the one that ends up possibly being the gap up, and that was a shitty feeling. I gotta admit it. So yeah, I mean, over time, just trying to manage, the situation. I was trying to think maybe, if what I can do if this thing gaps up, trying to prepare myself, trying to be objective about the situation, but it was tough. It was tough knowing that this thing, especially on a T12, you never know when it can resume. So as I was constantly paranoid about this thing resuming during pre-market, obviously I'm in the Pacific time zone. Pre-market officially starts at 4 a.m. my time, which is 7 a.m. Eastern. So I was constantly paranoid that this thing could, resume at 4 a.m. It could also resume after hours. After hours for me is 5 p.m. Pacific time, 8 p.m. Eastern time. So constantly paranoid that it can resume at any point in the day. So I was pretty much basically in prison, incarcerated, with only my best friend being this computer screen that has the DGLT chart in level 2, just waiting to see if it was going to resume, because I didn't want to be in the bathroom while this thing resumes, gapping up and ramping off to God knows where. So that's pretty much what I went through. It was terrible. I really hope that this does not happen to anyone else. Again, T12s, T1, T12 halts, not predictable, regardless of what anyone says, unless you're best friends with NASDAQ or the SEC or something like that, which would make it illegal. You cannot predict these, and I feel just as bad for the longs that end up losing big on this, because I could have easily been a long, because this stock was a long. It just made new high of day. If it did one washout and held that 90 level as new support, I probably would have stopped out, taken my loss in the short, and went long. So I could have easily been stuck long in this thing and lost 50%. So I absolutely feel bad for anyone who was long this thing, and I also feel bad for the people who were short this thing that ended up bleeding out to fees, or shorted way too many shares and ended up bleeding out to fees. So that brings me up to the next point. So a lot of people thought that I was in with margin or something like that. No, I was not in with margin. Just to clarify that, the reason why I was frozen out of my buying power was something called the $2.5 per share rule, and I'm surprised that a lot of people aren't aware of this. Maybe it was more popular back then during the penny stock days, where we were trading stocks that were below $2.50 more frequently. But the rule is, and you can Google it, is basically that if a stock is priced below $2.50, for every share that you're short, you need to put up or front $2.50 of capital. So that basically means that, say, if a stock is at $1, like DGLT, and you short 10,000 shares, right? Let's say you have a $25,000 account, right? Pretty standard PDT account, and you short 10,000 shares of DGLT at $1. And in your mind, you're thinking that you're only short $10,000, which is less than half of your $25,000 account. But the 2.5 per share rule basically says that you have to front $2.50 per share. And since you're short 10,000 shares, your margin maintenance requirement is now $25,000. So that basically takes away all of your $25,000. So that basically freezes you out of your account, pretty much. So that's the mistake that I made, and obviously that's something that I should have considered. But here's the reason why I didn't think about it, is because 2.5 per share rule only applies when you're shorting something and holding it overnight. And you guys know me. I can't even remember the last time I held something overnight. I mean, it must have been 2, 3, God knows how long ago I held something overnight. So it just slipped my mind. Obviously, if a rule doesn't apply to me 99.99% of the time, it's going to be something I'm going to overlook. And obviously, the one time I get stuck on something, I forget about it. It just happened to violate this 2.5 per share rule, and that I didn't consider because I don't usually go overnight. And obviously, with this halt lasting for 7 weeks, I was pretty much forced by gunpoint to hold this thing overnight, which absolutely sucks. But again, it's our responsibility to always be aware of these things as traders, not placing the blame on anyone else or anything else. Always be aware of it. So that's why I'm talking about it in this video. 2.5 per share rule. If a stock's below $2.50, you need to front $2.50 of capital. So just give you guys that example. You short 10,000 shares or something at $1. That means you got to front $25,000 of capital. Okay. So, and another thing I want to debunk, short interest. There's lots of people out there that are very confused at the way these things work. People don't understand short interest. Oh, are you paying the locate fee every day, or this 3 times hard to borrow fee, whatever? They're paying that every day. You're bleeding out the fees. What's going on? Okay, this is how it works. At least at Centerpoint, which is a broker where I trade, you get dinged with the hard to borrow fee, the standard hard to borrow fee, on the first day for borrowing it the first time. You get dinged the 3 times hard to borrow fee once, and the 3 times number comes from the T+3 settlement. That's where the 3 times hard to borrow fee comes from, which is now a T+2, by the way. So I believe now it's only a 2 times hard to borrow fee. Although I haven't experienced that in person yet because I don't hold overnight, so I'm not 100% sure. But theoretically, that should be the case. And short interest is basically something that gets charged by the broker to your account, and it basically says that based on the demand of the stock that you're shorting, they give you basically an APR of the short interest rate. Okay, so if a stock's short interest rate is 100%, basically you're gonna lose your entire position. Assuming that the stock resumes by the end of a year, you will lose 100% due to just solely interest on top of whatever else you may lose or whatever. So it is a pretty big deal, but you got to understand that short interest is variable. Short interest is something that's high on stocks that are very high demand in terms of shorts. So a stock like Dries had a very high short interest. Why? Because everyone was shorting it. A stock like RTNB, which was recently shorted, had a very high short interest as well. Why? Because everyone was shorting it. Okay, it was a stock that was previously in play. There was lots of people on it. Dries was a stock that was in play for multiple days, so a lot of people were holding it overnight. Therefore, high short interest. So DGLT, today was the first day it was in play, and it was only in play for 2 hours. So as a result, DGLT's short interest was not anywhere near as high as Dries or RTNB. So just wanted to dispel that misconception out there that DGLT, for whatever reason, had ridiculously high short interest rates or whatever, and people were bleeding out. No, that was absolutely not the case. So just wanted to clarify that to people. 2 main things that are thrown out there, obviously the whole margin, being on margin thing, and why was I locked out of my buying power, and the short interest, was I bleeding out due to fees? No. Okay. Now, the next thing, why didn't I reload my account? The reason why I didn't reload my account is because I told myself that I allocated a certain amount to my trading account. The rest of my money most of it was in non-liquid form, tied up to other things, investments, basically non-liquid cash. So I didn't want to liquidate it, and especially combined with the fact that the market was relatively slow. At the beginning of this halt, I didn't mind sitting out for a while and taking a vacation just to get my mind off of it, because this was a pretty bad experience, getting stuck in a halt for the first time, and I just wanted to get away from trading for a while. Now, once the market did pick up toward the tail end of this, I was very tempted to reload my account, but once I realized that DGLT, I was following the DGLT situation, obviously minute by minute. Once I realized that things were about to probably resume very shortly, I kind of decided, I'm just gonna sit this out for however long it was gonna last. It was only like maybe a week or two left, and I opted to just do that. And once my account, once this thing resumed, and I was able to get out of this finally, I got my account back. There was no problem. So those are the three main things that were often talked about. Just wanted to clarify with others that you guys understand what exactly was going on. Now I'm going to go ahead and load this video so you guys can finally see how it's like to trade on the gray markets. So this stock was delisted. That was finally the thing that really helped me out. That buyout news, which seemingly was legit, was pretty much negated by the delisting of the stock. And not only that it delisted, it went to the gray markets, which is like, the Siberia of the OTCs, if you will. And, that was pretty much a guaranteed gap down. When I found out about that, I knew I was going to be good and finally be out of this. Not only, have this nightmare over and done with, but have it end with a happy ending. So let's go ahead and talk about the this video, which I'll play in fast speed because literally it's just, like I said, it's a total circus. It's just me canceling and putting in orders, canceling and putting in orders over and over again. So let's go ahead and put on the video. All right. So let's go ahead and speed this up. So as you can see, I had 50,000 shares short at 88.5 cents. Now a lot of you guys are going to be like, what the hell are you doing? Why are you shorting 50,000 shares? Well, the stock was below $1, so I was led to believe that 50,000 shares, that's not that bad. I mean, that's $40,000 in principal. Same thing as going 10,000 shares on a $4 stock. So if you think about it, that was my reasoning. Obviously, didn't consider a 2.5 per share rule, again, which was a mistake that I admit. But again, overlooked it because I don't go overnight. Totally slipped my mind. Not blaming on anything else. My fault. But, yes, that's why you see the 50,000 shares short position there. Looks like a lot. But again, it's only $40,000 in principal, same as going 10,000 shares on a $4 stock. So we pick it up here pre-market, 2 minutes to go. I got up extra early for this. I got up around 4 a.m. and just to figure out what was going on, called OTC markets just to make sure that they were actually resuming today, and they told me it was. And I'm just sitting here pretty much waiting, glued to the seat pretty much. Made sure I got my cup of coffee, brushed my teeth, went to the bathroom, make sure that I'm pretty much, I knew I was going to be in here for a while, just to figure out how I'm going to get out of this with the best result, the best outcome possible. So now we see the market open. Might even speed this up a little bit more. So we can see there's no prints right now. I'm pretty genuinely concerned that the stock actually might not open today when I saw no prints. And again, this thing's in the grays. That's why you see no level 2. No level 2. Gray market is no level 2. No market makers. It's basically, no different than, buying drugs off a drug dealer at some shady alley in Compton. I mean, it's really, it's not regulated. There's no level 2. You'll see that the volume doesn't even match up. Everything is just out of control. You'll see the prints here very shortly soon. 9:33 was when the first prints showed up, which was a sigh of relief for me because for sure now I know. There you go. You see me try to get out at 60, put an order over the current price. Now you can see all these prints here. Look at that volume, and look at the volume, 18,569 on the montage, not matching up. And you see how sketchy this is. So DGLT opening now negative 47.4%. And the reason I have a 90-day 1-hour chart is because the chart obviously doesn't go, the 3-minute chart doesn't go back that far. Have the 1-minute chart below, just so I can see. I mean, I don't expect the chart to be useful at all. It's going to be extremely choppy. It's going to trade. It's going to look worse than a 000, as you can see there. It skips to 70, 100,000 shares. I wasn't kidding, guys. Like I said, this is a circus. You know, it's just jumping around. Prints are just sporadic and intermittent, and it's just this is the gray market for you. If you guys haven't seen the gray market ever, this is hopefully something that you never have to experience unless you're short something and you get a nice gap down you can cover. But expect a very, very difficult situation to get filled. So at this point, I'm just on the phone with, Centerpoint, my broker, trying to figure out what route works, what is the most optimal price for me to put to get executed. As you can see, I'm putting a price over the current prints, and it's still not working. It was 55. I put 60, 65, didn't get filled with this route. ARCA is not a route that works in this situation. If there's no ARCA book, there's no, the typical routes that you would normally use don't work. So you can see there a print below what my order was at, not filling. It's just all over the place. Look at that. Look at all those 55s going through. None of them filling me. You see the 66,000 volume on the montage now. 71,000. Obviously, at this point, well more than 71,000 shares have been printed. Look at that. I'm trying to put 80, not getting it. At this point, I'm a little bit scared. You got a couple ones printed there. 63 right away. Look at that. It's all over the place. 95. I mean, I'm just trying to get out. I just want to end this nightmare. Get out of this alive. Go home. Just carry on with my life. And I was actually going to go on a cruise, and I had to be out of the house by 10 o'clock my time. I had to be on the boat by 12 o'clock, and I couldn't stay long here. So I didn't want to stay here all day. I really wanted to get out of this thing. Last thing I want to be stuck on this thing trying to get filled, while on a cruise with sketchy Wi-Fi. Which, by the way, if you guys ever take a cruise, the Wi-Fi there is absolutely abysmal. Don't ever try it. Still trying to get filled. Look at all these canceled orders and just not getting anything. Like I said, guys, it's just a nightmare that seemingly won't end. Finally the stock resumes, and now you can't get filled. And it's incredible how these things play out. And again, the gray market, this is just how it is. Prints jumping all over the place, stock going up 100% out of the blue. All over the place. Look at that chart, the 1 minute chart below. It's just, what is that? It doesn't even look like anything. So it's already been 21 minutes after the open. I'm still not getting filled. How many orders have I already tried? I don't even know at this point. I'm just really, really frantically trying to get out, trying to figure out what works. And you'll see eventually, obviously, that I do get out, but I'll explain what happens then. So we're at 9:53. And what I'm trying to do right now is I'm just trying to match up with the numbers that I'm seeing prints at. I don't want to put any odd numbers like 57 or 60, 69 or something like that. Just because if you look at the prints, they're going through at usually not nice numbers, 60, 55, 70, 75. So I'm trying to put numbers like 55, 60, 65 to see that hopefully maybe that matches up with another sell order or something. So that way I can get out, but that turned out to, not really help the situation. But, you know, it was an interesting idea. Look at that. 95, 90, 60. Again, just all over the place. So we're already at the 30-minute mark. Still no fill. I mean, just try to put yourself in my shoes. I'm sitting here. I've been stuck in the stock for 7 weeks, and I've been sitting here for 30 minutes. I gotta be somewhere in a couple hours, and it's been 31 minutes, and I can't get filled. Can you just picture that situation? You know, stock finally resumes. You're excited that you can finally get out. It's been 32 minutes. You're sitting here. Can't get out. Not a good feeling, guys. Not a good feeling. But it will be over soon. And you'll see in a couple minutes another order change there. Still trying to get filled. 40 minutes now into the day. Still nothing. I mean, look at all these shares filling below my limit order and not getting a single share filled. It's got to be beyond frustrating. Tens of thousands of shares just going through at 60 or lower, which is my current limit price, and just not getting a single partial fill. Still trying. Approaching 50 minutes now. Past 50 minutes, 51 minutes. Still no fill. All right, so pause it right here. You can kind of see that I changed my route to Puma. And it turns out what happened was, the reason why I wasn't getting fills was because ETC failed to change DGLT from a NASDAQ listed stock on their system, to an OTC stock, and the routes they had available were not the right OTC routes. I mean, can you believe that? As if nothing worse could have went wrong. But what happened was they had the wrong set of routes out there. They had the NASDAQ routes, so why the order wasn't going through. They finally loaded the proper OTC routes, which included Puma, and you'll see what happens here. And voila, at 10:24 and 42 seconds Eastern Time AM, the nightmare is officially over. And all it really took was to figure out what the right route was, and apparently they put the wrong routes out there. Had to figure out what was wrong, and finally picked the right route, and it filled less than 2 minutes after trying for 50 minutes of using the wrong routes. So that's the gray market for you guys. You can see my print there, 50,000 shares officially gone. You don't know how good this feels, guys. It feels better than, think about maybe the time where you had to take a piss really badly for hours and there was no restroom, and you're on like a very long drive or something, and you finally get to go. I mean, this is like the equivalent of 100 of those. Finally, thank God, out of this thing for a nice $14,000 profit. At this point, I just started doing laps around the house and just started screaming at the top of my lungs. Like, it was unbelievable that I was finally out of this thing. But I just wanted to make this video for you guys to illustrate a couple of things, again, to dispel the misconceptions of what was going on. The 2.5 per share rule, which I encourage you guys to Google and read about yourself, because a lot of you guys that watch my videos are probably traders that like to short sell stocks. It's probably a lot of stocks that are below $2.50. So if you ever consider making a trade, this is something that you have to consider. Obviously, when you're shorting, because it's gonna factor in. If you ever get stuck in a halt, you're gonna be in trouble. Short interest, it's obviously something that's arbitrary. The broker can assign any short interest rate they want, but more often than not, it's going to be higher if it's a stock that's higher in demand. So think something like Dries. It's going to have a high short interest. So if you get stuck in a Dries halt, you could be screwed. So something to consider if you ever want to short something like that overnight and don't want to get dinged with fees. T1, T12 halts, not predictable. As far as I know, I'm going to work really hard to try to figure out if there's any sort of pattern. There are some possible patterns, like if the stock's up a lot or something like that. But there's nothing definitive. You cannot predict it unless you got insider information straight from the SEC or NASDAQ. There's no way to predict it. So that's something that we as traders have to take into account, that this is something that can happen at any time. I've already pretty much resigned to the fact that I will probably get stuck in another halt at some point in time, which is something that I cannot control, but which leads me to the next thing, discipline, right? Discipline is something that you can control. You cannot control external forces that may adversely affect things, right? But you can control your discipline. So moving forward, if you feel like a stock gets too risky or whatever, it feels haltish for whatever reason, just downsize. So that way, if you get stuck in a halt, you're not stuck with 50,000 shares like me. You're stuck with maybe 1,000 shares. At that point, then who cares, right? You're not going to really care even if it gaps up like a ton of, like several dollars. I mean, yeah, it sucks to lose a couple grand, but you're not going to blow up, right? So downsizing is something that I'm probably going to do moving forward. Probably, as stocks go up and they get halted, maybe with a circuit breaker or something like that, maybe that captures the attention of the SEC or NASDAQ or whatever pattern may be that triggers these T12s or T1s, which again, there's no definitive way to predict them, but you can mitigate the effects of it by downsizing when you feel like things get too risky. Again, you don't want to ever get stuck with too many shares because you're going to get frozen out of your account because of the 2.5 share rule that's going to eat up all your buying power. And also you might get dinged with a heavy short interest rate if a stock is heavily shorted stock with high demand. So again, focus on the things you can control. Don't focus on the things you can't control. That's the takeaway from all this. So that being said, guys, hopefully you guys got your questions answered about this. I know it's a very, very rare situation. Hopefully I don't have to deal with it again. I don't wish this upon my worst enemy. It was an absolute nightmare from start to finish, especially that buyout news that made me think that this thing was going to gap up against me, on top of possibly getting dinged with fees, and on top of the fact that this thing resumed on a day where I possibly could have not been able to sit at a computer to trade because I had to be somewhere. If this thing resumed in the afternoon, I could have been screwed. A lot of things could have went wrong here, but thankfully that OTC delisting was the saving grace. And yeah, I had to endure 54 minutes and 44 seconds of being stuck in this thing, trying to get filled in the gray markets, trying to fidget around, figuring the right routes and all that, just to figure out that they screwed it up in the system and had the wrong routes. But you know what? I'm out. Took my $14,000. Again, not really celebrating that profit because this could have been completely avoided if, I just downsized appropriately and gotten stuck with maybe smaller shares instead of 50,000 shares. So hopefully you guys learned a thing or two. I definitely did. Hopefully you guys found this video helpful. And hopefully from this point on, the market stays hot and I can keep making some pretty awesome free videos on YouTube for you guys. Free awesome content as always. Thanks a lot for watching. Leave a comment, subscribe. I'll see you guys next time.